Good, whatever you're watching this. Welcome to day 3 of week 3, and for week 3, this will be the last day for week 3. I was going over the syllabus again, and I saw that in the syllabus I had put in the indicators just to teach us about indicators, but I have not been trading with indicators personally, so there's no point having indicators in our course, and we are just going to move straight to what really matters most. Sometimes we hint them. I know I promised to teach you Fibonacci, but Fibonacci is not really an indicator, it is a drawing tool. We will have that still in the course of our program. So right now, let us move down into what we have today, which is price action. Introduction to price action. This is an holy grail. This is a classic one that puts together what we have been learning, especially in this week 3, the past 2 lessons that we have learned. This is how you apply them more and get better result and better use for everything that we have learned. So let's get straight into it. So today we are stepping, let me take my demonstrative tool. All right, today we are stepping into one of the most powerful trading concepts, which is the price action. This is a pure form of trading that helps you understand market behavior without relying heavily on indicator, or if you are going to be a trader like me, without relying on indicators at all. For indicators, we have a lot of them. We have moving average, see them right here. Let me open that up on my chart. We have all of these indicators, even on MetaTrading 5. They are numerous like that, a lot of them in there, right? But they lag behind. Whenever we use indicators practically just take price into action and do some mathematical whatever to show some things on your chart. I know you would have seen something like a moving average if you watch a lot of Instagram content. If you watch a lot of content online, you would see something like this that I'm showing on the base. Just a lot of them like that, and it gets overwhelming. You see this person saying, when this one cross over, nah, let's just look into price action, and that will tell us what we want. And I've been using it over the years, and it has been good. Like currently today, I'm in some trade. I'm looking at some setup that I want to get into. This EU, I've been in drawdown since yesterday. I mean in the negative since yesterday because I entered too early, and we are about to enter into profit right now. I'm even looking to add more positions to what I have. I'm looking at this GU to give me entry. I've been eating off this Euro GBP. I've taken partial of my to take partial means to take some of your money out. I've taken about $40 off this because I'm using a very small lot size to trade it, and all of this was just achieved by just having or understanding the concept of what we call price action. Simple as that. So let's get into it. So by the this is a pure form of trading that helps you understand market behavior without relying on indicators. By the end of this lesson, you will learn what price action is and why it matters, how to read and interpret price movement, how candlestick pattern and key candlestick pattern and market structure, and then how to apply price action in your own trading. After this week 3, next week 4, after the live session, you will start trading a demo account. So get ready. Let's get to it. So what is price action? Price action simply means studying the movement of price on a chart to make trading decisions. Studying the movement of price on a chart to make trading decision. That is everything that it is. Let me remove this indicator from my screen. Please get out. Yes. So looking at what price is doing naked, it's called naked forex, is everything that price action is, to be able to interpret what you are seeing on the screen. And once that is done, you are having an edge. Unlike using indicators, we just stay to raw price movement. All right, so traders can use candlestick formations, chart patterns, and key levels to predict future price movement. Remember, I gave you an idea of how I look at price key levels, those areas where we had multiple actions on a particular price or in a zone or in a region. Yes, that's what is being referred to as key levels. So think of it as a trader reading price action is like a driver reading road signs to navigate traffic safely. Simple. You see no U-turn or U-turn, speed limit, bump ahead, a bridge ahead, zebra crossing. You know, if you neglect those symbols on the road, you can get fined, you can pay in an accident, things could go wrong. That is exactly the market. Whenever it prints price, practically is showing you as a trader some indications, unlike the road where you know where the road might go. But because we don't know the future in the market, we can predict, because at least price will move from one zone to another zone, meaning that it will leave a key level and target the next key level, or even come back to that same key level. So price action is how to understand how these things work. So why price action matters? Number one, it shows real-time market psychology. Number two, it works in all time frames and markets. I told you at the beginning, I think week one, when you grab the knowledge of this that we are doing, you can be able to analyze cryptocurrency, you can be able to analyze stock market, basically everything, because it is the same, right? Just some little intricacies. Oh Jesus, English. Just some little intricacies about how they might be different, because the stock market is not open 24/7 like the forex market is. So just those other things. But when it comes to price actions, they are basically the same. So it helps traders react faster to price changes, unlike indicators that lag behind, right? So let's go to the next thing. How to read price movement. When looking at a chart, price moves in 3 directions. You should know that already by now. You know the price can go up, the price can go down, or the price can go sideways. When it goes up, what do we call it? Uptrend. That's correct. Now, in an uptrend, I did this in the last lesson, but I've not given us a prior explanation, so pardon me, let's take it now. In an uptrend, the market will form something like this, right? And this is just basically called higher high and higher low. Try to practice this for like 2 to 3 minutes every day, but just say higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, uptrend, right? So meaning that this low, this is an up, this is an high, this is a low, but this low is higher than the previous low. This low is higher than the previous low. This high is higher than the previous high. So it forms what? An uptrend. And there goes higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. That's it. Let's see an example. A classic example will be from here up to this place, right? If I want to mark that out, I could go, this is an high, this is a low, this is an high, this is a low, this is like an high, this is a low, this is an high, this is a low, this is an high, this is a low, this is an high. And he wanted to do a lot of lower low, but it did not still take out a lot of lows and just went higher high, right? So this is to show you that most of the time it's not going to be just simple like this. But when he's making his way up, I will reference this low as my higher low because it's higher than this low, and this higher low because it's higher than this low, and then higher high because of course it transcends all of them. So it takes time to practice and understand these things, because it will not just come out. It's like being in a classroom and your teacher gives you an example. You know, when you get to the example, the example is not going to be the same thing that your teacher had taught you. Well, it will be the same thing, but they will always look harder. So something like that. So whenever this happens and we're an uptrend, what it simply means is that buyers are in control. And remember what I told you, when the market is going up and buyers are in control, what are you going to do? You are going to find how to get your opportunities by also following the trend and look for buy entries as well, right? Secondly, let's move on. Another direction that the price moves is what? Downtrend, which is downward, which is downtrend, right? And in that case, when the market is going on downtrend, this is how it looks like. It goes zigzag, zigzag, and down, like you can see here. You can see here. So when we talk about there is an overall trend, when you look at an higher time frame, you can say, oh, overall the market is going like this. And there is a mini trend. When you go to 1 hour, it could have multiple of look like uptrend, look like downtrend. But as traders, we first establish ourselves on the higher time frame, maybe on the daily, and establish in our mind an overall trend, right? But all these movements can always interchange and switch. That's it. So like from here down here is a downtrend. You can see it with your eye that the market is going down from here down to here. So look at this. This is high. I will not take any of this low. Okay, I will take this low, high, low, high, equal low here, but could not take that one. Came back, did this, went like this, came like this. If I bring that out, what do you see? Downtrend. Looks complex, but that's a downtrend. So what does the downtrend do? We have it as lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And what does that mean? That means that the low here is what? The high here is lower than the high here, and the low here is lower than the low here. In that case, whenever you see that price going down, what it means is that sellers, how do I keep dragging this guy? Sellers are what? Sellers are in control. Simple as that. All right, moving on to the next one. The third one is sideways, which we call the range bound market or consolidation. When that happens, it means that the market does not know what the market is doing next. Buyers are in the same proportion as the sellers, and they are just fighting to see who wins. An example of that is here, where you can see a new high or a new low, because every time this one moves, it gives a new high. And every time this one moves, it gives a new low, right? But for a sideways or range bound market or consolidation market, there are no new highs and new lows. All right, so those are the price movement. So let's see how we can dig into this more, because all of this story does not matter. We want to make money from it. That's why we are knowing them. So let's move on. So key action, price action concepts. We talked about this. We had a whole lesson on this, right? Support and resistance. So for the support, a level where price stops falling and bounce up. You know this already, just a refresher. Resistance, a level where price stop rising and falls back. So let's just use an illustration like this. The base here being a support, here being a resistance, right? That is just basically price action. So a major concept of that is support and resistance. And the second one is to look at candlestick patterns. Remember candlestick patterns? I will list some here, but we are going to focus only on two, because I focus on them more than every other. There are a lot of candles in the market, but I focus on this even way more. So candlesticks tells the story of price movement in a given time frame. The most common patterns include, you know, this one, engulfing. You know, engulfing. When you put bullish in front of it, it means what? A reversal up. Bearish engulfing. Don't worry, I'll give an example of that. A reversal down. The doji, you know, the doji is a candlestick that does not have enough body but has too much wick than the body. That could be an indecision in the market. That price is showing, okay, I don't know what buyers and sellers are doing, so whoever wins, I'm going to go in their direction. And then we have the pin bar, the strong rejection at a level. Let us see if we can catch some of this on a real life market. All right, so number one, if you remember, the definition of a bullish engulfing candle: a small red candle if your bullish and bearish candle are green and red. This applies to you accordingly, right? A small red candle followed by a big green candle. This shows buyers are taking control, signaling an uptrend. Mind you, this is just a signal, an indication that this might be the case of what is going to happen next, so that you can get ready to get in and get your money, right? Let me zoom in on one that I just cited here. It said a small red. My own black is red. I'm sorry, I always forget to switch up these things when I'm about to record these lessons, right? And my own blue is green. Please don't get confused. So a small red swallowed by a big green. This is a bullish engulfing candle. And what do you see here? The market was coming down initially, right? But when it got here and printed this price on your screen, it's indicating a reversal back up, a change in direction. If this was in a uptrend and we still saw something like this in an uptrend, what it can mean is a confirmation of the uptrend. For example, look at the one that we have here, right? It confirmed that, oh, this thing is still strong, let's go, and it went all the way to this place, right? That is just what that is. Very simple and nice. All right, now let's look at you see the definition is reversal up, and a bearish engulfing candle meaning reversal down. And this is what bearish engulfing candle pattern means: a small green candle followed by a big red candle. A small green candle followed by a big red candle. This means sellers are in control, signaling a downtrend. If you notice on our example, we can see one at the top here when the market was already trending up from like here. When it got here, what did you see? A small, what color is this? My green again, green candle. My blue is green, a small green and a big red, signaling a reversal down. So anybody that got here will be able to sell down before the market changes again. So the market can move into one mode to another, but these things will signal us to know, oh, this might be a change, oh, it might continue like this, right? Mind you, this is a daily candle, so imagine how many days this downtrend was active for. That is 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 days. That's 2 weeks. How many pips is that? From up here to down here, that's about 367 pips. If you have just your 0.01 lot size on that, you're making $300 easy, but for 15 days. Don't worry, when we get to the dynamics of how to make money and scale, you are going to get that even way better. All right, so for the rest, I don't really pay too much attention to them, but when we see them in the market, we know that we ought to sense some action happening. A doji candle appears, indecision, and you had the bias of wanting to buy or sell. You might want to take a chill and wait for another candle to print and confirm your bias before you enter into the market. This pin bar, let me see if I can identify pin bar, but really I am not really a okay, I see one. A pin bar happens at a price and a big rejection. Look at what we have here. Look at this price that we have here. This price looks like a zone. If you look at the past, it really, come on, shift. It really went like this, right? So anytime there is a, like a doji on a price, on a zone that you have identified, and it rejects it sharply. In fact, most times it will not have anybody. it can be an indication that market is about to change direction. But I don't really use those as my own confirmation. As we go on even into more practicals, I'm going to show you firsthand how I look at the charts. So that is that on key price action concepts. Now let us move into how to now apply this action in trading, because that is why you want to know them, so that you can apply them and make some money up. All right, so number one is that you need to identify support and resistance level. That's why I'm saying that this lesson brings into action the two that we have learned in the past lessons, right? So number one, you already know how to identify support and resistance level, so you do that. Step two, you look for candlestick patterns on this level. Now, any candlestick pattern that is in the middle of nowhere, do not pay attention to them. Do not pay attention to them, because you always, everything looks like a pattern. Everything looks like a pattern. But the one we want to really pay attention to are the ones that happen at a level. Those levels that are support and resistance level. Then number three, confirm trend direction. Know, are we in an uptrend or we are in downtrend? Why? Because that would decide whether you are buying or you are selling, right? Then three, and if you are in consolidation, don't do anything, just look away. Then step four, wait for price action confirmation before entering a trade. All right, I'll teach us more about confirmation, maybe on a live lesson. We'll talk about confirmation. Some confirmation are, oh, this is a zone that the market is going through. Remember our breakout and retest. Those are tools for confirmation. All right, so watch that lesson again as well, and then you understand this part more. And when we meet on the live lesson, I'm going to put them all together for us in a practice for us to see how I will use it in a chart. All right, so example of trading strategy. Number one, if price hits support and forms a bullish engulfing candle, you know, a support is a zone, and then price reached there and a small red was being swallowed by a big green. What does that tell me? This is about to change. Let me find my buying opportunity. Then we'll try to position ourselves to get in. Or if price hits resistance and form a bearish engulfing candle, it hits the resistance up, and what? A green candle is swallowed by a big red candle, I will consider selling. All right, that is just basically everything. So here are some mistakes to avoid when you are using this in your trading. Number one, people trade a lot without confirmations, especially those ones that happen at the region. They just trade in the middle of nowhere. Always wait for price action signal before entering a trade. Number two, ignoring market structure. They don't care whether we're in an uptrend or we're a downtrend. They just want to get in and get something. So you have to understand if the market is trending or ranging before placing a trade. Then number three is over complicating charts. They will put moving average, put all the indicator, put many trend lines. Some trend line will be crossing at. Why, bros? Keep your charts clean. Focus on key levels and price action. Let me show you my current trade. So look at what I have here. This is the trade that is going well for me the most this week, the Euro GBP. Let me go to my daily time frame. I can brag about my chart because usually I keep it clean, man, nigga. All right, so we have this. On a daily, it looks like consolidating. I know. But from down here to up here, we had already made a new high. This high is higher than this high, is higher than this high, and these are a lot of days before. So when this happens, I'm looking for market to make a low that did not take out this low. If I was going to be entering my position from here, I was going to do what? I was going to put my stop loss here, because immediately this takes out this, then I'm waiting for another dynamics to happen. But what did I do? I waited, right? Then a lot of action is going on here, and when this market came and tested here, let's go to 4 hours so that you see how I refined my entry, right? and I saw that there was a channel, and candle, this was market open that tried to freak me out, but this was a channel. Happened that on the day that I recorded about channel was when this happened, right? So I bought here and I put my stop loss below here. So if it takes me out, my risk is reduced. Unlike me now just entering now, because here will be a lot riskier, even though it will end up in profit, right? And my take profit is where either this next consolidation area or beyond. And if it doesn't go, I already took some money out of there, and that is it. Let me see if I have one more example. Okay, for example as well, look at this Euro USD. It is also in a channel. I figured the channel, I saw my support and I saw my resistance, and we are trading in between, and this just happened recently, right? When the market opened, it has not come down here, so I have my stop loss way below this other low, right? Because it was making high, low, high. This low did not come up, so it came down and made a low that did not touch this one. So I'm hoping that it comes back and make a high, and I'm just holding on to that position. So that is how I currently look at the market. Mine might look a little bit advanced for now, but we'll get to it. Yours will be as clean as well. So that is it. Keep it, don't overcomplicate your chart. Just 2 lines, 3 lines, 4 lines, your zone line, your current trading condition, and you are good to go. So common mistakes to avoid. No, that was been an error. This is our exercise. This is our practice exercise. Not common mistakes again. Practice. Spelling of practice. I still never know since all these years. Exercise. Is that correct? Autocorrect. Do your work. Yes. To change. So open your MetaTrader 5. You use MT5. So open your MT5. I promise you, I'm still going to make a video about TradingView. I've just had the time to make a video about TradingView. If I see the ones that my mentor did, I can still send that a link to you. Then mark support and resistance level on any currency pairs, but you know you are not going to use any. Use Euro USD. Observe candlestick patterns at those levels where you have marked out the level. Then identify the market trend. Put that in your notes. All right. No, I told you 1, 2 on the other lesson. I'm going to check these notes or ask you what you did when we meet in our next class. All right. So with that, we come to our key takeaway. Price action helps traders understand market behavior without indicators. Support and resistance level are key to predicting price movement, and candlestick patterns gives clues on buyer/seller strength. And then the best traders wait for price action confirmation before entering a trade. And that is that for now. I hope this lesson was enjoyable. I hope you enjoy watching it as much as I enjoy recording it for you. And on that note, I'll see you on the next one. Cheers.